Hey, what's up guys, it's Mike. The video you're about to watch I have actually filmed months ago, well before the pandemic ever hit. The way this video works is if you want to just see exactly how to fill out the form and just jump right into the tutorial on that, skip to about the 10-minute marker in the video, 10 to 11-minute marker, where I cover an example and show you how to fill out the form on screen. But if you really want to learn not only how to fill out the form, but really understand what you're getting involved with the IRS when you fill out this form, please watch the entire video. I know it's a longer video than most of my other ones, but I feel you'll get the most out of it that way. I filmed this so long ago that the office actually looks different than it does now because it was well before the remodel. But nonetheless, I hope you enjoy. Not being able to pay your taxes can be a scary thing, but in this video I'm going to show you guys how you can set up an installment payment plan with the IRS, go over the basics of how it works, and actually show you how to fill out the form on screen towards the end of the video to avoid or prevent the IRS from taking more aggressive action towards you. Hi, my name is Mike the CPA. Welcome to Money and Life TV, where we teach videos around finances, investing, taxes, and more. I'm not going to skimp on any details in this video, but definitely feel free to use timestamps. Here's the video layout on screen of how we're going to discuss installment agreements so you can jump to any point in the video if you choose to do so. Let's get started. Now, the first thing to understand is, what is an installment agreement? Well, an installment agreement is something you can set up with the IRS. It's basically a payment plan that you can set up with them on. It's a monthly basis payment plan. So you would be paying the IRS every month based on the balance of your unpaid taxes that were due that you could not pay at the time you were filing your tax return on April 15th or October 15th or whenever. This installment payment plan can be extended. You can actually pay them up to a 72-month period, sometimes even longer, but don't you dare let me catch you paying the IRS for 72 months. It would be one of the worst financial mistakes you could ever make. But nonetheless, the purpose of the installment agreement, of why it could help you, is you're trying to get on good footing with the IRS, and that if they see you doing that, then they're less likely to go take a more aggressive action and actually try to lever your property or your asset.
Immigration?
Revenue.
Mrs. Rose, there are people here from the government.
So getting in good standing using an installment agreement is usually a good plan if you can't afford to pay your taxes when they are due. So before you actually get into an installment agreement, when should you not get into an installment agreement? Well, I can tell you guys, if you can pay off your tax due, and I hope this is the case for you, but if you can't pay your taxes, but if you can pay off that amount before 121 days with interest and penalties, then I recommend you do it that way. It's going to be a lot cheaper, less expensive for you in the long run to do it that way rather than getting yourself into an installment agreement. But an installment agreement is there for you if you need it. Now, most of the installment agreements I've helped set up for clients have gone through with no issues. And you're likely to have an installment agreement guaranteed under a couple of circumstances. The first one is if you're eligible for a guaranteed installment agreement if the amount you owe to the IRS is not above $10,000. Also, you would be more likely to be guaranteed an installment agreement if you've timely filed your tax returns for the past 5 years and kept current with your past tax liabilities. That's going to get you on good standing for an installment agreement. The third thing that will help you get a guaranteed agreement is that you try or give your best effort to not pay your taxes off in 72 months, but you offer to pay off your tax liability in under 3 years. That's really going to help you get a good footing with the IRS. And the fourth reason also helps guarantee you that you get an installment agreement if the IRS can reasonably see that you're unable to actually pay the taxes that are due and that you're not just, holding back the money just because you don't like them. Now, how do you actually fill out an installment agreement? Well, just so you guys know, there's a couple different ways. The first way, and the easiest way in my opinion, and especially if you owe less than $50,000, and yes, I have seen people owe more than $50,000, but the easiest way, as long as you owe less than $50,000, you can usually set up an installment agreement online through the IRS website. I'm going to leave links and everything I'm talking about in a handout document I'm going to give to you for free regarding installment agreements. And also I'll leave the links in the description section below so you can find everything I'll be discussing throughout this video. But if you do it online, not only is it easier, it's quicker, but it's also going to cost you less money to set up the agreement. And there are setup fees to starting a installment agreement with the IRS, which we're going to discuss in just a second. If you don't want to set up an installment agreement online, there is the form you can fill out, which I'm going to show you that form on screen. It's really simple, guys. It's probably going to take you less than 10 or 15 minutes for most people. So you can do it either way. You can do it online, or you can fill out that form. It's whatever you're most comfortable with. And in some circumstances, you might be inclined to actually call the IRS directly to help set up an installment agreement. If you owe less than $25,000 to the IRS when you're filing the installment agreement, well, then all you need to do is fill out page 1, which we're going to cover here in just a second. If you owe more than $25,000 but less than $50,000, you're going to fill out pages 1 and 2 of the 9645. Now, thirdly, if you owe more than $50,000 to the IRS right now, you're going to fill out pages 1 and 2, and you're going to have to fill out this form now because you can no longer have the option to fill it out online. You're also going to have to fill out page 433-F. It's basically a collection statement. The IRS is going to want you to list out your assets and property on that statement, and you're going to include additional pages if necessary to make sure you incorporate all of your assets. Now, don't worry, even if you do have to fill out the 433-F, it's not the end of the world. It doesn't mean the IRS is actually going to come after your assets, but they like to have a list of what your assets are if they needed to, or if you were unable to pay, or whatever it may be. But either way, you're still getting on a better footing with the IRS by doing this than if you were to try to ignore them. There's a few things I want you to know before you start to set up this installment agreement. The first thing you should know is there are setup fees. Yes, talk about being kicked while you're already down. Yes, they actually want you to pay them additional money to set this thing up, which really sucks, but that's just the way it is. The cheapest way to do it, as I mentioned earlier, is do it online. If you pay them each month by check, there's a little bit more of an expensive setup fee. The second least expensive way to set it up is to do direct debit, which I recommend, is where you will specify, and we're going to see this on screen, what day of the month you want them to take the money out of your account, and then they'll just do a direct debit out of your checking account. And that's the second least expensive way to set up an installment agreement. Remember, the least expensive way is online, second least way is doing direct debit, and the most expensive way is if you want to do it by check. Now, in some circumstances, if your income's really low, like below the national poverty level, you can actually call the IRS and they will usually waive the fee for you so you don't have to pay the setup fee. Like I said earlier, you can also set up an installment agreement over the phone. I don't recommend doing it that way, but you can. And if you're already undergoing bankruptcy, which hopefully you're not, but if you are, then I strongly suggest, and in fact the instructions encourage you to call the IRS directly to set up the installment agreement if you're already in bankruptcy for other reasons. So quick overview, guys. You can make payments to the IRS with your installment agreement using checks. You can use direct debit, which I recommend, or you can use money orders, which I do not recommend, but you can do it that way. You can also use debit or credit card, but I think there's additional fees to process it that way, so I don't recommend those options. If you want to get out of this by paying the least amount to the IRS, you're going to want to do direct debit. So Mike, what happens if I just ignore them and I just don't pay my taxes? You're going to keep getting notices in the mail, and the more you ignore those notices, the worse those notices are going to get. And eventually, after they don't hear from you so many times, they're going to start to take action and take the steps necessary to start to levy your property or your assets. They may garnish your wages or take other corrective actions to get the money they are owed for taxes. They are like owing the mafia, guys. You do not want to owe the mafia. They have unlimited power to do basically whatever they want with you and your finances. So take this seriously. It's not the end of the world, but do not ignore the IRS. It will make your life a living hell, And nobody wants to be in living hell. Other thing you guys should know as you're setting, even if you're in the process of setting up an installment agreement, just because you get the agreement in place doesn't mean interest and penalties won't accrue. They still can. So just do whatever you can to pay off that balance as quickly as possible. And you're going to see that you can basically determine the amount you want to pay each month to them to pay off this tax liability. And that's why I think paying off this liability as quickly as possible is the best thing you can do for yourself. When you try to set up the installment agreement, don't be surprised if it takes longer than 30 days. Typically, it takes about 30 days to set up the installment agreement, but it can take up to 60 days. So I've seen it take anywhere from 30 to 60 days. If you haven't heard from them 45 days in, please call them and see what the status is of your installment agreement and make sure they received it so you can get on the right page and the right footing with them. Before I forget, regarding the interest and penalties, they're pretty brutal. The interest rate is not that high. It's like 1 or 2% right now because it's the applicable federal rate, which they charge you on the amount you owe. But the penalty portion is a real B. It is a real B, folks. It's 5% of the amount due per month. Let me say that again. It's 5% every month on the balance due. So it's like paying a 5% interest rate every single month. It's pretty insane. Up to a maximum of 25% of the balance due. So that's how long that interest can accrue. So the quicker you pay it off, you're gonna save so much more money. I usually don't recommend taking loans from banks, but in this instance, I absolutely do. Because it's what I found, it's much cheaper to owe a bank, like a credit union, than it is to owe the balance due for the IRS. So what you would do is you would go, if you can get a loan from your local credit union or local bank, take a loan from them and then use that money and immediately pay off your debt to the IRS. It's cheaper for you to do that in the long run. The bank's not going to charge you penalties. They're going to charge you interest, but they're not going to charge you those steep penalties every month like the IRS will. So it's usually cheaper to owe the bank rather than the IRS. Now, let's take a moment. I'm going to dive in on the computer behind me now, and I'm show you how to fill out this installment agreement on screen. So join me now. All right, ladies and gentlemen, let's fill out the installment agreement together. I'm going to show you how the 1040 form connects to the installment agreement form. This is a blank 1040. Now, this is 2018, of course, because 2019 forms are not out. But the way this would work is first you would look at your individual tax return. You would scroll down to the bottom here, and we're going to use an example. We're going to say Chipper is our example because Chipper partied too hard. He made a lot of money on YouTube, but unfortunately, he neglected his taxes, didn't pay attention to them, and spent all the money partying. And so now he owes a lot. So when he goes to file his tax return on April 15th, or whenever he files it, he determines that he owes $15,000, which is what he has not paid in yet. So he's going to owe that money, plus he may owe some additional interest and penalties. Depending on the tax software you're using, they're probably going to show up right here. So if you have interest and penalties, you're going to include those in the total balance. So let's say that Chipper had $15,000 due plus $200 in penalties. Well, then that would mean he would owe $15,200 when he's setting up the installment agreement. That's how that works. So you want to include whatever interest and penalties are factored into that as well. But for simplification, we're just going to use $15,000 and move on. Chipper is ready to fill out the installment agreement now. So what he would do is he would go from his 1040, he would see he owes $15,000, and then he would pull up on the internet. And like I said, I'll leave links to all these forms for you guys in the description section and comment section below. And he would pull up form 9465. Form 9465, which is the installment agreement request form. It's really simple, as you guys are going to see, but the first thing you're going to do, or Chipper is going to do in this example, is he's going to list the form number. So if this is his individual tax return, so he's going to put 1040 right here. Let me zoom in to make sure you guys can see that. He's going to put his name, last name, social security number. If he's married, he would put the spouse's name as well. In this case, he's not, but that's what you would do if you were filling this out if you're married. You put your address, you'd put your full address, and then down here, you would put the name of your business if it's no longer operating. You'd want to put your telephone number. So Chipper's listed his telephone number here. You have to list the best time for the IRS to call you. Typically, the IRS will never call you, but they might when you're setting up an installment agreement. So that's something that's kind of weird, kind of unique to this kind of situation. So you would list that as probably, or whatever your work number is too. For many people, that's just their mobile phone number, so you'd list your mobile phone number twice. Now, Chipper, like we said, he owed $15,000, right? So on line 5, it says, enter the total amount you owe as shown on your tax returns or notices. You might be getting tax notices at this point in addition to your tax filing, but for this example, to keep it simple, we're just looking at a person owing from their tax return, okay? Just from the tax return. In this case, $15,000. It says if you have any additional balances due that aren't reported on line 5, enter the amount here, even if the amounts are included in an existing installment agreement. Some people may already have prior installment agreements in place. You would include them there as well if that is your situation. But for this example, to keep things simple, there's nothing else we need to include. On line 7, it says add lines 5 and 6 together and enter the result. There's nothing on line 6, so line 7 is simply $15,000, right? Oh, then on line 8, it says enter the amount of any payment you're making with this request. Chipper owes $15,000. Whatever he can pay in, we recommend he does so. Chipper at least has $1,000 in the bank that he can make with this installment agreement request. So he's going to make it to reduce his overall liability to the IRS. So on line 7, we had $15,000. We're going to put in $1,000 payment. Therefore, at the time of the installment agreement, Chipper is going to owe roughly $14,000, right? And we're going to enter that on line 9. Now, the next thing it has us do on line 10, it says divide the amount on line 9 by 72. If you remember, I said you have up to 72 months typically to pay your tax liability. I don't recommend it, but you can. And so what you're going to do is you would take the balance due on line 9, so 14,000. We're going to divide that by 72 months. And you're going to get $194 per month. That's basically the minimum payment you could pay in over a 72-month time period. So we list $94 there on line 10. Real simple math, guys. Real simple math. So that's the minimum, is $194 in this example. Now let's go to line 11. I think line 11 is really important because you have the option to pay an even larger amount. And I recommend you pay as much as you possibly can every month. As long as you can keep food on the table, roof over your head, you're good. Just pay in as much as you possibly can. Get this debt paid off, guys, as fast as you can. That's what I recommend. So it says enter the amount you can pay each month, make your payments as large as possible. Basically, so Chipper determined that he can pay in $400 per month. Now, why is that number important? If you remember, when I was talking about ways to make sure your installment agreement request is approved, is one of the ways is to make sure you pay off that debt to the IRS in less than 3 years. So if we know Chipper is going to owe $14,000, if we divide that by 36 months, look at that, $388 per month is what he would need to pay, roughly, in order to pay this off in less than 3 years. Therefore, we're going to put $400, we're going to say that he's going to try to make $400 every single month to the IRS to get this liability reduced as fastly as possible, or as quickly as possible. Now, it says it's important to note 11B, pay close attention. It says if the amount on line 11A, which is the $400, is less than the amount on line 10, which is the minimum amount of $194 in this example, then you're also required to fill out Form 433F, which is a collection statement for the IRS. And if you want to know what that looks like, this is what it looks like. Let me pull it up real quick. This is the collection information statement. It's a bear to fill out. I think it actually takes a lot more time than the actual installment agreement form does itself. But it's going to want you to list your name and address, social security number information, your personal bank accounts, what investments you own, including cryptocurrency, which is interesting, real estate, your other assets, your credit cards, just all these different things, information regarding your business, because the IRS wants to know what assets you have so they can levy them if you don't follow through on your requests, if you don't follow through with your installment agreement obligations. But they do require you to fill this out. That's something that to keep in mind. If you need more room, what you do is you just attach additional pages to this form when you transmit this over to the IRS. So that was 11B, but because Chipper is paying more than the minimum, he's good. He can just leave a line 11A as $400, and he can leave line 11B blank. We come down here, there's not much more to this. It says on line 12, this is really important in terms of your budgeting and when you get paid, when you can make your payments and stuff. It says, enter the date you want to make your payment each month. It says, don't enter a date later than the 28th. So anywhere from the 1st of the month to the 28th of the month, you want to make sure you have your money ready to go somewhere in between that time period, and you want to indicate to the IRS when they're going to get paid. So you can choose whatever payment date works best for you. Just make sure the money's there and you're able to pay them. 13 is kind of self-explanatory. This goes back to the direct debit, this is the method I recommend in the long run. It's going to save you the most money. It's going to be the less setup fees, and it's a little easier for the IRS to work with, so you're more likely to be guaranteed an installment agreement. But you're going to enter your bank routing number and your account number for whatever checking account you want the money withdrawn from in order to pay the IRS. Last but not least, if you come down here, you can see if you're a low-income taxpayer, you might be able to get your penalties waived. This is something to look into. If you want to make payments by payroll deduction, you can do that. However, most people, including the clients I've set up installment agreements for, choose to forego that route. Most people like just to make separate payments to the IRS, but you do have the option, though, of doing a direct payroll deduction if that's something you want to do. Now, this example I showed you was somebody who owed less than $25,000 because Chipper owed less than 25K in this example, and he owed less than 50K. But remember, I said if you owe 25,000 but less than 50,000, then you would also have to fill out page 2 of this form. So if you owe 25 to 50,000 or less than 50,000, then you would fill out this form, and it says it right here on the top of page 2. They basically want to know where your primary residence is, your marital status, how often you get paid, when you get paid, what kind of assets you own. It asks if you have health insurance and some of these other things. So it's not anything hard, but just something else you need to fill out. Now let's talk about where do you actually go file it. The best place and the easiest place to find more information, including where to file this, is the instructions for Form 9465. What you're going to do is you're going to come down here, and this is only 6 pages, and this is the best place to learn more about this stuff and what I've referred to multiple times when setting up client installment agreements. But you're going to come down here, and it starts on page 3, this page right here. It says, where you live, based on where you live. If you live in California, then, for example, Chipper lives in California, so he would use this address right here. It says, if you live here, then use addresses over here. So for Chipper, since he's in California, he would use this address right here. So he would send it to the Department of Treasury, Internal Revenue Service in Kansas City. Now, you have to be careful, though, because there's a weird stipulation here that you have to be cautious of. It says, before you determine where you're going to mail this off to, it says, for all taxpayers, except those filing Form 1040 with Schedule C, E, and F, that says, then you can send it here. So if you don't have a rental, if you don't have a business, if you don't have a farm, you can send your installment agreements to one of these addresses. But if you do have a business, a farm, or whatever else, you're going to want to send it to a different address. It says, for taxpayers filing Form 1040 with Schedule C, E, or F, for any tax year for which the installment agreement is being requested, then you're going to want to use one of these addresses right here. So just look at that carefully and then mail it off, and you're going to send your check in. Like Chipper had, for example, for the first payment, since Chipper had not set up an installment agreement at that point, let me go back to the form, he would want to mail in $1,000 or $1,000 check with this form to help reduce his liability. And then 30 to 60 days later, Chipper is going to be contacted, or you'll be contacted when you fill this out by the IRS to let you know if your installment agreement was approved. I will leave their phone number of what number to call if you're wondering if it has been approved, but don't call them before 30 days because they're just not going to get to it. They're really short-staffed, and they have a lot of installment agreements and other things they're trying to process. So give it at least 30 days before calling them, probably like 45 days before you call them, and then check back if you haven't heard anything at that point. All right, ladies and gentlemen, that is the installment agreement walkthrough. I hope you learned the basics of how these things work. It's not the end of the world if you owe the IRS, but get your debt paid off as quickly as possible, and that's going to get the IRS, which is a giant gorilla, it's like a mafia-sized gorilla, off your back. And just do whatever you can going forward to keep current with your taxes, do a better job of tax planning, tracking your income, and just being more on top of your taxes. Because in the future, it may be harder to get an installment agreement if you already have one in place. It's very important going forward that you keep whatever. So if you're doing an installment agreement for 2019, you want to keep your taxes current for 2020 as much as possible so you don't get in this situation again, because the IRS might not be able to grant you another installment agreement in 2020 if you're behind on your taxes at that point. It's very important you keep current on your taxes going forward from this point. I know it's a big financial obligation, but it's something you need to do as a taxpayer. I can tell you as a CPA, I've been doing this for about 8 years. It's very important that you do that, so please listen to what I'm trying to tell you here. With that being said, guys, if you found the video helpful, if you like the work I do here, you can support the channel by dropping a like, leave a comment below, especially if you have any questions regarding the forum or how this stuff works. And if you're new to Money in Life TV, welcome to the channel. On our channel, we make videos around finances, investing, taxes, and so much more. To not miss any of our future uploads, all you have to do is hit that red subscribe button down below to subscribe to the channel. It's completely free to do so. And you can hit that bell notification icon. That bell notification is going to notify you every time I release new content on the channel, which is typically once per week. I appreciate you guys hanging out with me, as always, on YouTube. I hope this information was helpful. I'll see you in the next video. Have a great week, everybody. Live life uncaged, and I'll see you in the comments below. Peace.